So it's my pleasure to introduce you to Stephanie Arnheim. She is the founder of Stephanie Connects, Portland's networking expert, former eWomen Executive Managing Director of the Portland chapter. And I've asked her to introduce our October Spotlight speaker, Debbie Page. So take it away, Stephanie.
Thank you, Cindy. I am honored. Debbie was a mentor to me when I was managing director and executive managing director of the Portland eWomen Network chapter. So I was super excited because I love hearing Debbie speak anytime we can. So we're super honored to welcome our own Debbie Page as our October Spotlight speaker. Debbie Page is an internationally recognized award-winning entrepreneur and cash flow efficiency business coach who has been on her own entrepreneurial odyssey for 20 years. During that time, she has acquired, scaled, and sold 2 successful businesses. As a business coach, she knows that what we measure matters, and when we learn, we earn. She is active in the local and international business community and has the distinction of being the first and only consecutive International Femtor and managing director of eWomen Network. When she isn't coaching her clients around the world, she can be found spending time with her beloved Labrador Retriever, Harley Hounderton. In Debbie's 20-minute talk, she will share cash flow success for your small business. Cash flow is the lifeblood of small business and is mostly misunderstood. When starting your business, the vast majority of effort and energy is on marketing, branding, and messaging, and cash flow is overlooked until it's too late. Take charge of your business financial future and security in this fast-moving conversation. Please join me in welcoming the amazing, brilliant, and always wise and witty Debbie Page. And also, I remind her to start her speaker timer.
I love it. Thank you so much, Stephanie. It is a mutual love fest whenever I see Stephanie. She's just such a bright light, and I always love your just very practical, very candid conversation. You were always an inspiration to me, and how direct you always are in expressing what you need. And oftentimes that gave me more courage than you probably know to express what I needed. So thank you for that. So yeah, I love it. All right, guys. So here's the thing. We're going to talk about cash flow today. And I purposely did not do slides. I want to make this interactive. I think oftentimes, especially in our world of Zoom lately, for the last nearly 2 years, like you just see the slide and see the slide and see the slide, and it becomes background noise. And so I really want to feel like we're able to have a connection, because, you know, if the last nearly 2 years taught us anything, it was how important cash flow is, and how important it is as small business owners to have cash reserves, and how important it is to have backup plans. You know, cash flow is one of the things that is rarely talked about in business. And so today I want to remove some of the mystery from this. There are going to be some amazing things that you are going to already know. And I want you to be like, yep, I know this. So don't tune it out, actually validate and say, yep, I know that. And then ask yourself this question, but what am I doing about it? Right? So sometimes, you know how it is, you're listening to the presentation, you're like, yeah, I know that. But what are you doing? And that's the difference, right? The knowing and the doing is where we make that connection. So here's what we're going to talk about today. I've broken our agenda out into 6 areas. There's going to be an introduction, because I know many of you, but not all of you. So you probably would like to know who's the crazy lady who is leading this conversation. I'm going to talk about what the heck cash flow is, just to remove some of the mystery around it and how I help my clients look at it. We're going to talk about why cash flow is important. In some ways, it seems like of course it's important, but we're going to go a little bit deeper in that part of the conversation. I'm going to pull out the difference between cash flow and profit for you, and talk about how you can measure the cash flow and not just your profit or your revenue. And then we're going to wrap up with how to manage cash flow. What does that look like for you? And then obviously I'm available for questions and then next steps. So as Stephanie said, I'm Debbie Page. I have been a business owner, entrepreneur for 25 years. I have been doing coaching in the area of cash flow and profitability for 10 years this year. I didn't start any of the businesses that I have or that I have now because I knew how to run them. I started them because I had a passion, found a purpose. There was an opportunity that was presented to me, and I ran with it. What I did differently than many people is that when I recognized I didn't know what I was doing, I hired my own coach who knew how to run businesses and who coached me. And I think that's, a secret to many people's business success. As Stephanie said, I've acquired, scaled, and sold 2 businesses, and am known as the leading authority on cash flow and profitability for women business owners. And as Cindy shared in the networking nuggets, one of my best pieces of advice is stop getting ready to get ready. And when I say that, it's not just relative to cash flow, it's relative to anything. It can be relative to having somebody like Lisa come in, right? So we have to get organized to have the organizer come in and help us. Or before we have Mary Gail come in and help us with our wardrobe, we have to, figure out what we're going to keep and what we're going to sort before we can buy something new. One of the greatest things that I have learned in my business journey is that if I just trust the people who are really good at what they do, I save a lot of time in the getting ready to get ready part. I don't need to do that. They're going to handle that for me. Stephanie mentioned I need to update that bio that you have, Cindy, because my beloved Harley Hounderton passed away in July. And so I have been dogless here at Home Sweet Home until yesterday. Yesterday, I officially adopted a 8-year-old Labrador Retriever, and his name is Buster. And Buster is a former Washington State Patrol bomb dog who does not know how to be a dog. So he knows how to work, and he can find stuff really, really good. Really good with his nose. And so Buster and I are just getting to know one another. And so that's super exciting. And then I will share this with you guys because you're in my inner circle. The afternoon after I confirmed Buster's residency and that he would officially be mine, I received a birth announcement. And one of those little nuggets is going to be Buster's baby brother. So I had put a deposit in, and as is the case, when you don't think you're going to have, what is the thing my friends who've adopted say, we didn't think we were going to have kids of our own. So we found the right, adoption situation. We adopted, and then shortly thereafter, they find out they're pregnant. So I'm not pregnant, but I adopted, and I'm going to have a little bundle of joy. So there you go. There's my good news. So that's the update in my bio. I'll need to get that fixed. So, and for those of you who know me, I could live my life just petting dogs, all of the dogs. So, and that's fine. All right. So let's talk about this. What the heck is cash flow? In its simplest, cash flow is just the movement of money, how your clients pay for products or services in and out of your business. So cash flow can have an inflow, and cash flow can have the outflow. So how it comes in and how it goes out. It's the rhythm of our business is the way I like to think of it. Inflow, so the cash flow in, primarily comes, as I said, from the sale of goods or services. It only happens when you collect the money from your client or customer, or you collect if you work on an accounts receivable basis when the invoice has been sent out. And then at some point, net 15, net 30, that money comes back into you. You can also have other types of cash flow outside of the transaction of your business product and service sale. It could be cash flow that comes from borrowed funds. So that some people saw this last year through the PPP program. So round 1, round 2, those were also considered inflows of cash into your business. It could also, cash flow could also include the income from sale of assets. So some of my clients who have manufacturing businesses, we will have cash flow influxes when they're going to sell a piece of equipment that either has lived past its usefulness for them, or they have decided that that's not something that they're interested in pursuing anymore. The outflow of your cash has to do with the result of paying your expenses and all your bills. So that can be the things like wages, purchasing inventory. So for those of you who hold inventory, Heidi, I know you have obviously your online store where people can purchase, their products through you. Heidi may have those things in inventory, or she may use a drop ship method where she doesn't hold the inventory and somebody else does that, for her. But that can also be one of the ways that money will go out of your business. It could also be purchasing raw materials. So I look at Tamara Frausto, right? So look at all that beautiful fabric behind her. Those are raw materials. So when she is purchasing fabric, not only is it an expense, but it's an outflow of cash in her business that is mitigated when she sells the end product, and then the cash flows back into the company. It could be operating costs, right? So the cost to actually operate the overhead of your business if you have rent. It could be the repayment of loans. So if you have done some type of lending situation in your business through the SBA or through your local bank, that is also an outflow of cash. And because it is 3 days away, it could be the payment of your taxes, October 15th. There's my gentle reminder that if you have yet to file your personal taxes, and you have filed your extension, October 15th is your day to do it, and make sure that you're paying all your monies as well. So that's the outflow side of cash. Now, there's two types of cash flow. One is positive cash flow and the other is negative cash flow, right? So kind of the opposite ends of the spectrum. And the positive cash flow is, where you're bringing, essentially summarizing, you're bringing in more money than you have going out. Negative cash flow is you're not bringing in enough money to cover what you have going out the other way. And that would be indicated, say, on your profit and loss statement when you look at your P&L and there is, depending on your bookkeeper, either a negative number at the bottom, or if they're like my bookkeeper, that number will show up as red to make sure it really gets your attention. And when I refer her to other clients, people get anxious when they see red, which is kind of our idea. So this is something we need to talk about. Businesses will not survive long-term with negative cash flow. You can get away with it for a while, right? You can float it along, but I'm going to tell you, negative cash flow is a symptom to a bigger issue. And use those statements, your cash flow statement, your profit and loss statement, as the way to tell you, ruh-roh, there's something going on here that I need to address now because it won't fix itself. You are the CEO of your company, and it is your responsibility to figure out what is happening with that cash flow. So why is cash flow so important? Well, as business owners, we have to have enough cash at all times to meet all of our obligations, period. And poor cash flow is at the top of the list of reasons that businesses fail. Sometimes when I meet with a new client, I will ask them about their cash flow. What does that look like? And they'll say, yeah, I don't have a lot left over, but I'm meeting all my bills and I'm good. But I'd like to have more. I say, that's fantastic. Now, how much are you paying yourself? Well, I'm not. Okay, so now we're in a negative cash flow situation. So we all went into business to make money. And we have to make sure that we, as owners, CEOs, and founders, are paying ourselves in some capacity. So if you aren't meeting all your financial obligations, including paying for yourself, your business cannot succeed. So here are 7 reasons, like I said, why cash flow is important to your business. And I think this is one of the areas for you to kind of pause for a second and think, how might this apply to me? So the first reason is it maintains good business relationships. And what does that mean? Well, if you have positive cash flow and you're meeting your financial obligations, that means you're paying your suppliers and vendors in a timely way. If you don't have good cash flow, then you fall into the category of robbing Peter to pay Paul, dodging the phone call, pretending you didn't see the email come in, kicking the invoice into another folder that you forget about. And this doesn't maintain good business relationships. And your reputation in business is a currency that you cannot afford to discount. So making sure that you have good cash flow will allow you also to leverage and negotiate perhaps more favorable terms that have a more positive or better impact on your cash flow. The second reason you want good cash flow is it gives you more negotiating power. Kind of piggybacking on what I just said, if you have strong cash flow, you're able to negotiate terms that are a little more favorable to you when you get into issues of supply. The third reason your cash flow is so important is that it allows you to expand and take advantage of opportunities. You know, this is one of those moments where when you know your cash flow is good, when the right opportunity, and again, you need to use your filter, what right opportunity is, you can step in and say yes to that opportunity without being paralyzed about having enough money to come in to cover whatever this opportunity is. The other thing about cash flow, and we saw this a lot over the last 2 years, is that good, healthy cash flow puts you as a business owner in a position of being able to access financing and funds when you need it. If your cash flow is all over the place, there's no consistency to it, you spend more months in the red than you do in the black, and it's up and down and all over here, it's really hard for a bank to step forward and say, yeah, you feel like a good risk. You know, the way that a bank will look at an application is the same way I look at it, you know, with my clients, is what is it telling me about the health of the business? And if we have 4, 5, 6 out of 8 months that are at negative or nearly break even cash flow, that really is concerning when it comes to a bank who's wanting to make sure that you're going to be able to repay those things. So again, think of cash flow in some ways like your personal credit score. Cash flow, I think, is a good way to look at your business's credit score. It tells you the health of the business and it starts to give you some clues. And also, again, like I said, identify opportunities where you can make improvements. The fifth reason why cash flow is important, it's easier to navigate the downturns. If you've had positive cash flow, you tend to be able to set aside more money successfully, have that safety net, have that reserve emergency bucket of money, and allows you to float along longer. Now, again, with COVID, as I've said before, none of my business planning ever in any circumstance ever involved what happens if we find ourselves in the middle of a global pandemic conversation. And now it does. So we really take a look at things differently. And I think it is imperative for all of us to review our business planning and our cash flow situations and what we're doing for marketing and sales through a different and more critical lens now. It's easy to go along when things are pretty good. It is really hard to make changes when things are really challenging. And so looking at the opportunities to change when you're not under this pressure is a whole lot easier. The sixth reason cash flow is important is it improves planning and decision making. You're able to forecast and look out into the landscape of what would it require for you to say yes to this next best opportunity. What investments from a decision standpoint are you going to be prepared to make because of the healthy cash flow that you have of your business? And then at the end of the day, it's number 7, but it's something that all business owners should be thinking of, is that your positive cash flow increases the value of your business. So again, similar, like I said, I like to use the analogy of cash flow as credit score for your business. If you are, personally, your credit score is not, at a level that somebody who wants to do financing feels it's acceptable, they will put you in that higher risk category. For somebody who's shopping around to look at a business, if your business has inconsistent or consistent negative cash flow, that really decreases the value of your business and all the hard work you put into it. So set yourself up for success for sure. And so now let's talk real quick about what the difference is between cash flow and profit. So cash flow, again, is the way the money comes in and then the way the money goes out. That's the rhythm of that business. Profit is, I'm going to say, what remains after the revenue comes in and then all your obligations are met. The profit is that bucket of money that is left. So cash flow is how it moves through your business. And then the profit is the piece that you are left with at the end. And to some of you, you might be thinking, yeah, I know that. And I will tell you that 6 out of every 10 conversations I have with business owners, there's still confusion around what is profit and what is cash flow and how do I actually measure that. So there's no shame in that. So where do you analyze the cash flow? What does that really look like? Well, you can lean on your bookkeeper for sure. You can look at your accounts receivable. So for any of you who do invoicing, that will tell you if your accounts receivables are aging too long, meaning that you do terms net 15 or net 30, but you're not getting paid for net 45 or net 60. That's a cash flow problem for you. Credit terms. If you are a business who finances the acquisition of your product, which can be a really smart thing to do to help your cash flow so that you're paying with the products based on current sales as they happen. But if you're noticing that your credit terms are COD, meaning you have to have it now, then that tells you that whoever you're buying from does not feel that the cash flow supports a request to be able to do net 15, net 30. And that falls also into that conversation with credit policy, which is the third thing you can do to analyze cash flow. And the credit policy, again, is the policies that other businesses you're doing business with set on how you can purchase items. So if you have to pay cash, they're concerned about cash flow. And how will you know that? Well, they'll typically ask for a cash flow statement before they extend credit terms to you. You can also look at your cash flow through your inventory. If you're sitting on too much inventory, that's going to be impacting your cash flow because you had to put a big amount of money out. And depending on your sales cycle, you may be sitting on too much inventory. I've worked with retail businesses who were sitting on, $200,000-$300,000 worth of inventory, and their cycle to sell it was way too long. And so we had to make some pretty significant changes to improve that in their situation, and again, they didn't know where to look. They just knew they had all this inventory, but they couldn't understand why they weren't making enough money because they had put so much money out. They didn't have the ability to put the products back out into the market. You can also look at accounts payable and cash flow statements through your bookkeeper. And then sixth, which is my favorite thing, which is the rhythm of sales. So how frequently are your sales happening? What times of the month? What times of the year? Those will all help you with cash flow. And then this last slide, and then we'll be done and I'll open it to questions, is how do you manage and improve cash flow? Well, the first thing is you can collect your receivables. I know you don't want to be a bill collector, but get on it. Have a process in place for people who owe you money. Have it written down and then stick to it. You need to stay on people who owe you money. They typically won't miraculously wake up and send you a check. So have your documented process in place and go get the money. You can also automate your billing process. If you're sending invoices with people to pay in net 15 or net 10, you can automate your billing process. PayPal is great. It can automatically send those invoices out for you. In fact, you can put people on an automatic ACH so that they're paying you on a recurring basis and you don't have to get into it. That's my favorite way because you don't need to spend any time being a bill collector. Accept electronic payments and don't create hurdles or barriers for people to try and pay you. I understand that you have to pay a fee if a client uses a credit or debit card with you, but you know what? I don't carry a checkbook. And so if I have to think twice about how I'm going to pay you as a service provider, I may not do business with you because while you care about that 3%, quite frankly, I don't. Put it in my bill. Add it into your pricing so that you're covered for that ultimately. Tighten the credit requirements. I don't see people on here who use credit terms with their clients for the most part, but if you did, that would be something. Controlling expenses. This is the time of year to get out that big red pen and look at what are your expenses and where can you cut some costs. That will definitely help your cash flow. You can obviously increase sales. That's one of the great ways, but we have to get in and figure out what's happening because increasing sales may not be the only answer. And then one of the other things that you can do to improve cash flow, especially if you're trying to get caught back up on things, is to offer some discounts as well. So kind of doing a bump to get cash moving in quickly while you're getting your system set up for consistency. And then one of the things that you might have to consider, depending on what the situation is you might consider a loan to improve your cash flow. It might just be that you need a bump of cash in order to get things turned back around to the right side, so that you can get caught up in your sales initiative. So those are the main ways that you can manage and then improve your cash flow. So with that being said, I want to open it up for a couple seconds of questions or comments or ahas, or Debbie, I don't understand what you were saying. It's a lot to try and put into 20 minutes, but I think it's important as you head into the time of year where you're going to be doing goal setting and strategic planning to be thinking about this as part of your process, if you don't regularly, and how you might incorporate it in. So thank you.
Thank you, Debbie. Great
Thank you.
job. This was a wonderful teaser for the skill shop that we're going to be talking about. But anybody have any ahas, epiphanies for Debbie? We're fortunate to have her share her brilliance with us. Stephanie, and then Molly. Go ahead.
I love your reputation is your currency. I love that phrase. That just really, it's like a tagline that, and also that your cash flow is your credit health score for your business. That just totally makes sense and puts the onus to look at it realistically.
Yeah, thank you for that, Stephanie. Yeah, when I was able to unpack that for a client, she was having a hard time understanding why it was so important. Like she understood it up here, but she didn't get why it was so important. And when we locked in on that, it changed everything for her and how she looked at it and why it was important and why she could no longer kind of just be like, we'll just kind of wait and see how it works out. So thank you for that feedback. Molly?
Debbie was my coach, I don't know, if it's 3 years ago. And it was something I had wanted to do for a very long time and finally did it. And, the stuff that she talked about today, and I'll say this, in total vulnerability, I didn't think I was smart enough to handle all this money because my husband usually did it. He took care of all of it. And what I discovered with Debbie is I was really the business mind. It really wasn't my husband. And I didn't know that. And so it gave me the confidence and because of Debbie, I soared through 2020 and the pandemic, no problems. And when she talked about the fact that when you have a positive cash flow, and this is what I heard what you were saying, you can open and do opportunities that you wouldn't have been able to do before. And that's why I was able to start offering ProSell, because I had the cash flow to be able to afford it. So thank you.
Awesome. Thank you. I always love success stories and working with people like Molly and those moments when you get it. And I think for women too, there's culturally, a lot of us have been, told, oh, you don't have a good head for numbers and, women don't do that and all the things and, cultural roles and norms and things. And it's not everyone, but it definitely happens. And I remember, Molly, for you in that epiphany, and I remember you and your husband, that was a big aha moment for him too, because there was a great deal of pride in that was how he supported and helped you in the business. And since you guys have made that transition, he's a lot happier not having to.
Oh my gosh. He just sits there and goes, this is awesome. He loves it.
Yeah, that's good. Thank you for that. All right, Lynette.
Yes, I just wanted a couple of things. One, Debbie was my coach back when Christ was a child, quite a while ago. And one of the things that I pushed back on her quite a bit with, and she won the battle, but I was treating my business like I was a contractor. I was an independent contractor, and there was a lot of things I didn't know about being an entrepreneur. And it was humbling, but the whole essence of cash flow was part of what she drove me with initially. And it's always stayed with me, Deb, and it's been a really wonderful journey for me in managing that on a weekly basis as part of which is something else Debbie taught me was, once a week, come hell or high water, you're looking at that P&L, you're looking at detailed what's coming in, what's going out, and that whole, and all of that